here's the issue with life insurance is that if you miss a premium, if the policy lapse, if there's increase in premiums and things like that, then the whole tax benefit kind of loses. Got Andrea or Andi from Seattle. Just like you, Andi.
Not quite, but we'll get there.
All right. Hey, Joe, Big Al, Andi, thanks in advance for my spitball. All right. Question has to do with life insurance policies. My kids in ADHD. All right. Those are three topics that we normally don't put together.
Yeah.
Let's go for it. In 2011, my mom took out $50,000 universal life policies for each of my two kiddos. The thoughtful motivation was that if anything happened to the kids, my spouse and I would not have to stress about funeral expenses. Fast forward, the girl is 26, doing great in her corporate job. The boy, 24, in a recent college graduate and currently studying for a graduate school exam. Both experience ADHD. So we are automating and streamlining all of their finances, but things are frequently missed, which is typical for a low dopamine home life tasks. I recognize financial dealings can also create dopamine, but in this case, not yet.
Nice job on the dopamine there, Joe.
I'm sorry?
I said nice job on the dopamine. You got it first try.
Yeah. You've been practicing, maybe. I don't know.
I no idea what low or high dopamine really means, but I just was gonna just.
Well, you don't want low.
I was just gonna go through it.
You want higher,
and then you guys had to call me out on that. Thank you very much.
Got to give you kudos when they're due.
I didn't. Andi started it.
All right. Currently the owner of the policies and pay premiums of $15 and $17 monthly, which I've been told will not increase significantly over time. Both our accumulation accounts and annual guaranteed accumulation interest rates of 3% in 2024. And the net benefit includes both the $50,000 in accumulation total. Both kids have expressed interest in marriage and family. The girl is in a serious relationship, and both agreed to my asking for a spitball on either keeping the policies active or closing and placing the current accumulation, roughly $1,000, in the respective Roth accounts. So let me get this straight here. So the girl has got a serious boyfriend.
Yeah.
So mom is like, hey, I'm going to throw a little spitball. Do you guys mind? They're all sitting around at the kitchen table, and they're like, yeah, I think that's a great idea. I'm just trying to reenact. I'm just trying to be there. Do you think is that what happened?
I don't think so.
Well, if somebody wanted to ask a spitball question about you, wouldn't you want them to ask you first if you were okay with it?
There's no names involved. It says girl, 24, boy, 26.
I like.
He's in a corporate job. Oh, I know exactly who that is.
I like the girl and the boy.
Yeah.
No, I think this is in her head. I think this is her own thought. What's the best thing to do?
All right, let's go. The math seems to indicate keep the accounts, though the value of $50,000 could be much less in inflation. But my fears of a missed payment, for example, forgetting when changing banks once they own the accounts, are not imagined. My health is an issue, so I could be handling these accounts over some point while they're still figuring things out. The important details: I drive a 2022 Subaru Outback. She lives in Seattle, right? Subaru Outback, guaranteed Seattle.
Perfect place for that. Well, also Colorado. That's the place where they drive this.
And anything with tequila is a welcome beverage. Ooh, yeah, Andi, I'm down with you. Hubs drives a 2005 Toyota Tundra and prefers craft beers. That's not too hoppy. My dogs now, but
no dogs now.
No dog. Oh, I'm sorry. No dogs now, but Newfoundlands were our dogs of choice in the past. Newfoundlands. I'm not sure what a Newfoundland dog is.
They're beautiful. They're huge. And I will share a picture of them with you right now. This is what they look like.
Oh, very cool.
Big shaggy dogs.
Oh.
Yeah.
Yeah, little kid.
Fluffy.
Yeah.
Yep.
Oh, that's cool. Newfoundland dogs. All right. Again, appreciate your thoughts in our situation. Andi, officially Andrea. My dad wanted an Andrew. How about you, Andi? Did your dad want an Andrew?
No, my dad actually wanted to name me after the sunken ship, the Andrea Doria, which was named after an Italian admiral. So male named Andrea, And that's what I got named after. So I often say, at least he didn't name me Titanic.
Oh,
A sunken ship?
The Andrea Doria, it sunk in 1953, I believe.
What kind of ship was it?
I believe it was a cruise ship.
Cruise ship.
cruise ship.
Yes.
Oh.
I
Okay.
think.
It was a tragedy that happened.
And,
Mhm.
and then you were born.
So he wanted to name you after the tragedy? Okay.
Yeah, I think he thought that the ship was very beautiful. So he liked the name. So he went with that.
Of course.
Got it.
Yes.
Okay.
The ship is gorgeous. Has to.
Okay. You keep the policies or you surrender them and put the money in?
I get where the ADHD comes in now into
Yeah.
play, because here's the issue with life insurance is that if you miss a premium, if the policy lapse, if there's increase in premiums and things like that, then the whole tax benefit kind of loses, right? Especially if you need some of the cash value, or the death, the cash value will get eaten up. And so you don't want to make sure that you miss any of that. So having streamlined finances is really key here. I don't know. You got $50,000. They're 26 years old. You're really going to be banking. I would take the money out and I would put the $1,000 into a Roth IRA.
I agree with you. And part of the reason is there's not really a need for the 50,000. Maybe there was at one time, as your mom kind of anticipated, but I don't think there's much of a need. I think this is more valuable to the kids in a Roth IRA, invested. They're adding to it over time, and then I think it starts a good retirement nest egg in their 20s. That's what I would do too.
I don't know. I'm sure we're going to get an email from a life insurance agent telling me
Probably.
that we're way off and you have to do better calculations and the IRR and the inside the policy and the guaranteed rates of whatever mutual company. I don't know. I think the dollar figures are probably not large enough. They're 26 and 24 years old and they're looking to start a Roth IRA, and if there's some liquid capital there to do so, I don't know. I think that's easiest. It's the simplest. If they don't make a payment, they're fine. If the you don't have to have this mix. And it sounds like you want it now as an investment, not necessarily as a death benefit. If you truly want the $50,000 of death benefit, then keep it for life, right? But it sounds to me now that the objection or the objectives have changed. Is that you're not worried about the $50,000 of death benefit, God forbid, if any of your child's, pass before you do. I would take the cash value out again. So
Yep.
I don't know. Hopefully that helps, Andy.